Caterpillar manufactures earth-moving equipment, diesel engines, electric locomotives and other heavy mining equipment.
Yeah, so it is quite strongly correlated to cycles in construction and mining, and that's been a bit of a problem for them because I think everybody knows the brand is a preeminent one, also some competition out of Asia.
Market cap, $54.5 billion. No price to earnings ratio, a dividend yield here of 3.3%. Let's start with the share price graph, and that can color our conversation.
But up and down. Wayne, what do you think?
At least it's going in the right direction now.
It reminds me of a South African resource share. Because that is in effect what it is. You massively destroyed in 2015, 2014 and 2015, and then the darling of the stock market starting the second week in January on 2016 and outperforming everything else hands down. So this is an American Anglo-American.
The stuff they sell
The
is
stuff
really
they sell
correlated.
is used in mining, and they can't keep up with demand now. Now that in itself, and this is a little bit of a theme of mine, that in itself will lead to the seeds of its own destruction, because this surge we're seeing, this rekindling of interest in commodity shares in the commodity market, is not because of a surge in demand, it's because of a cut in supply and a subsequent recovery in prices. So this is not a new China. This can last a year, it can last 2 years, but it's not going to last a decade like China did. And what's happening now is that the production companies, after cutting back in 2014 and 2015, are now starting to think about increasing production because they're all making money, so they're all ordering Caterpillars. So Caterpillar can't keep up with demand. It's going crazy, so they're going to have a wonderful time, but I don't think it's going to last nearly as long.
But so the question investors are wanting to know then is, how do they capitalize on the upside?
I think you're okay for a year.
For
I think you're okay for a year.
12-month outlook here.
But you must be wary, this is not the resumption of the super cycle.
But can you make a lot of money in that 12-month
I think so,
period?
yes, these guys can. I mean, their cash, you know why it's got no price earnings ratio? Because it's making a loss. Okay, so yeah.
All right. Paul, do you
What worries
agree?
me, though, is that it's already moved in
strongly.
anticipation of this improved environment. I mean, I know
So all
someone
the good news is already priced in.
Well, there is that danger. I think there's also still quite a lot of mining and other companies that have unused equipment on their lots. Now, the challenge for the company is to sell them something new, which has got a much lower price ratio. The competitive issues also worry me. You know, when they go to these trade shows, there are people from Asia who come around and take photographs of all of their new equipment. Then, you know, 9 months later, it's
reverse
available
engineer it
at
from the actual
40% of
photos.
the price, literally. So, you know, maybe the steel isn't quite as well made and the bolts are not as well put together, but there is always that risk. So I'm afraid.
So mixed bag here. Are you going to give it a hot on that 12-month outlook?
With the qualification that this is not forever.
Don't stay
Paul,
too long.
you sound as though you're not going to
I'm
give
going
it a
to
hot.
pass on this.